Good evening, everybody. This is Michael Filighera. I am with logicalsignals.com and also tradershelpingtraders.com. And this is the Elliott Wave update for the NASDAQ 100 for Monday, September 13th, 2021. The markets did pretty much fall in line with what I discussed yesterday, with the NASDAQ again rallying up, rejecting the rally, dropping down, and then rallying back, and then dropping back down. And that, I feel, has produced what I'm hoping will be the completion point for this minute wave 4. In fact, I noticed that I have neglected to put it in there. So come on, there you go. I'm going to put it in there right now so that we can see it. Yeah, hopefully. And edit the properties. And take off this. You can see my process here. Down to there, put that up to here, put it bold, and let it go. And so you can barely see, but that once we get a few more bars going here, that'll all be in sight. So what I ended up doing, because again, as you probably already know, the market did come down. And it broke below that level, which I had labeled as minute 1. And in fact, I'd put minute 1 here and then minute 2 over here. And even if I had switched it and moved it down a little bit, it broke below. And not just, it broke significantly. With this low being at 15,397, it got down to 15,334. So that was a significant enough break that I could not consider that wave 4 or consider that the completion point for minute 1. So I retook a look, I pulled all the charts, all of the labeling off, and restarted to just count. And I now have marked minute 1 down here and minute 2, and then it's just a very large third wave, which of course falls perfectly under Elliott guidelines and Elliott rules. As we already know, that most often the third wave of any impulse structure, whether that's up or down, the third wave is often the strongest and the longest wave. And what the rule is that it cannot be the shortest wave out of waves 1, 3, and 5. Well, in this case, we definitely see that it's definitely not the shortest, and it is most definitely the longest. But what this is also going to do is if this does mark the completion point for 4, then it's going to pull down, or actually it might even raise up even a little bit higher, the resistance levels for minute 5. And I just want to go over this labeling so that we're all on board with how I've done this now. Again, the end point for minute wave 3 is 15,708.75 or 15,709. We can round it up. And then we went through a complex A wave, a pretty normal B wave, and then a fairly normal 5 wave C. So we had 1, 2, and then 3 subdivided quite normally. And then we had a 4, and then we had the 5. And if you're wondering, didn't this cross over 1? Barely. But when I marked it down, it was just a throw over. When I marked it down and put it on a line chart, it was clear. It did not overlap. And so that's why I've left it as a 4 and put this in as the 5, labeled it as wave C, and then put the minute 4 underneath. The rally off is pretty decent, with the low coming in at 15,348, 348 was the low. 34 was actually the S&P, excuse me for that. So 348.25 is the low for the NASDAQ. And we basically have almost rallied 100 points off of that low. So it's a good start. It's a good sign on the hourly chart that indeed this should be complete. So what am I going to look for from here? Let's see if I can get this to blow its thumb up. No, for some reason, my charts just really don't want to do that. They do that instead. I'm a little tired of my charts that I'm looking for the initial beginning of a 5-wave structure up. Again, this is on the 30-minute chart. And so that's going to give us the support level that or the support that we need, that indeed wave 4 is complete and wave 5 is underway. Now, there's a lot of negativity out in the markets, and that all has to be absorbed. But what we have found is that the buyers are there. The buyers will step in and they'll take it up, and then the sellers will walk right in and smash them down. Now, buyers come right back in. So it's not like they're just coming in and buying a little bit, which would kind of tell you maybe it's just day traders covering a short. No, they're moving in and they're taking positions in these stocks. We did see Apple begin to recover again. Amazon was recovering again today. So all the major stocks, Microsoft up again today, or up today, starting to recover off of last week's getting smashed and smashed. So if that continues, and we see that there are going to be more people that are convinced, particularly in the retail sector for Apple, it's the largest retail stock that we have, then we'll likely just see that move pretty quickly back above 150 and then on up as they begin to move back in, realizing that the rally is back on. And that's fine. Now, what the market needs to do is it's going to have to get all of these moving averages all turned around. Took a while to get them turned lower on an hourly basis. It's going to take a little bit to get them back up again. Right now, all we have is the 4 and the 8 hooking higher. So we needed to move above the 20, which is sitting at 455, we'll call it. We have the 50 at 503, so that's 15,503. And then we have the 200 at 15,549, 550. We need to break and keep going. So these are going to be resistance now coming back up. And they may be points that will trigger sellers. So if you've got a lot of fund managers and they're planning out where they're going to start to sell, these could be the trigger points. But let's see what happens, because we still have Globex to start in about 40 minutes, 50 minutes. And then from there, we have Asian markets opening, and then we have the European markets to open. And maybe they'll take it that we've gone low enough, and they'll step in and they'll buy it as well. So I'm looking for, on the hourly chart, an initial 5 waves up. And as you can see, what I've got is just basically 2 hours of buying without any breaks in between. I think we have, if I go down, we may have 1. So I'm looking for the formation on my hourly chart of a 5-wave structure to put in the marking of the wave 1 of minute 5. That's what I need to see. It needs to be a 5-wave structure, followed by just a 3-wave decline, and then an additional 5-wave structure, and then an additional small decline, and then another 5. So I need 3 5-wave structures up to form wave 1. And again, this is a good start. So I will be looking for that to continue. Now, let me take this back so that I can start to put back our Fibonacci extensions. So the first one that I want to put back on is, what will minute 5 look like? It's right there. Really, 43? I'm gonna have to go in and fix that one. And then I want to do one additional, and that's going to be on the, let's see if I can get it on the 4-hour, and that would be for the minor. Yeah, I can. Minor 5. I'll put it there, and I'm going to come down to here. And I will, once I'm done, I will go back in and I will adjust all of those to make sure that they're correct on these. But this is just an estimate, so we can start to see where we continue to have a little points, zones of resistance, a cluster of resistance. And as you can see, we don't have that big cluster back up here. above 16,000. We now are beginning to cluster right around 15,800. And that would be where minor 5 is equal to 50% of minor 3, and that's at 15,805. Minute 5 would be equal to 50% of minute 3 at 15,774. So you see how that fourth wave kind of pulled down the upper expectations for the market. Now, most common Fibonacci relationship between a fifth wave and the third wave is that wave 5 would be 0.618% of that third wave. And that comes in at 15,875. That would be my first choice for where I think that can happen. We have this 50,805, but I think we can get up in between these two if the NASDAQ really does mount a decent rally. But my expectations for a lot higher begin to fade, because again, it's the same thing I needed on the way down. I needed to be able to count a 5-wave structure down, and that did occur. And so, same way on the way up, I need to be able to count a 5-wave structure with these subdivisions. So often, waves 1, 3, and 5 will subdivide into their own 5-wave structures. But then within those, and quite often it's the third wave, and often within the 3, there will be a 3 of 3. So in other words, wave 3 within that third wave will subdivide in and of itself into 5-wave structure. So that's what we call the extension. So the wave 3 is the most often the wave that will extend and produce an extension. But I have been finding more recently that we get those not just only in wave 3, but I've seen them they can happen in wave 1, they can happen in wave 5, as well as wave 3. So not that I would be expecting an extension in all 3 of 1, 3, and 5, but 2 of them is not uncommon anymore. So I'll be looking for those as well. So initially, I'm looking for wave 1 to form. That's going to give me the support that we're on the way. So wave 1 will consist of 5 waves. That's why I'm looking for 5 waves on my hourly. So for tomorrow, I think right now, I'm going to continue to look for 5 waves up before I get a little bit bigger or not such a shallow type of a pullback. Until that happens, I think pullbacks may be on the shallow side. There's still a lot of negative energy out there in terms of the market that we may see the selling continue. And that could throw a wrench overall into what we are looking for. Because again, downside, we can still accept it all the way down, but wave 4 is now beginning to get a little bit too big. Now, I really would not want to see this come down to the 15,226, which is our next support level down. I don't want to see it come much below where it bottomed today at 348, maybe down to 340, maybe down to 335. But that should really be about it, because we have that support right now, which is at 225. We have support at 284, but I need it higher. I need the market to be supportive of itself in any pullbacks. So that's where I'm going to keep my eye on. Anything too deep could again still spell that this finished all of the advancing sequences. And what this would then turn into is wave 1, wave 2, 1, 2, 3, 4, 5, wave 3. This is just a 4, and then we get a 5. Then we have formed on the hourly, off of the high, 5 waves down. So instead of being corrective as it is right now, it would turn into 5 waves down, which would be announcing the highs are in, and the next longer term, much larger correction is underway. While that is still what I expect, I do feel that we will get a finishing rally in the form of a minute wave 5 to complete minor 5, and then on up to that cycle level. What we have to be aware of, though, is if it turns and it breaks to new lows below what we did today, it's going to negate that. And I feel pretty strongly about that right now. Now that we have cleanly counted the 5 down for a C wave, anything beyond that really starts to push this count towards the highs being in. That's where I'm going to leave it for today. And the next update is on Tuesday, the 14th.